Welcome back to Ferocious Education. This is Ed. Today I'm going to be talking about something different here. I'm going to call it the GameStop Mania. And I need to explain a couple of things here just for new investors on and new traders on here, just to get a bit more of an understanding on exactly what's going on. So let's jump right into it. So if you watched my previous video, it's something called short squeeze. And what is a short squeeze? It's quite interesting. So let's go here, get GME short interest, one of my sites that I actually go on. It's called shortsqueeze.com, and it gives you a little bit of a percentage. Now for this one here, it doesn't have it, so if it doesn't have it, we can go on towards Finviz. A lot of these are inaccurate, by the way, but a big chunk of it is the rough estimate. You can get to see the GameStop short float is 121 now. That's from 150, and what they're trying to do here is something called short squeeze. Now GameStop, it's understanding how do you short a company in a half, in a way, the entire float of a company in a half. But look at the different companies here. Let's go to KOSS. Take a look at this. The short float currently is 0.93. Now it was previously around 45, I believe. So there was that. Take a look into here. It is a 98% decrease of the short float. There's no more, but yet it's still being pumped as short squeeze. And so that is exactly what I want to talk about. I want to talk about how this is an enhanced pump and dump. It's not only sticking it up to the big guy. And I'll explain exactly why. Before people come in and start commenting, just hear me out, because this is really important for me. I'm really not able to sleep because of it, because there's a lot of things happening here, and we only highlight sticking it up to the bigger guy, to Malvin Capital and Citron Research. But the fact that is that that's not only the thing we're doing. Now, of course, there's this bull versus bear, right? Think about anyone who shorted around 145, which makes sense, okay? I trade, I short and a long. It makes sense to short it on there. And they didn't recognize that RWSB had a cult-like purchase to continue on. They easily just lost their entire portfolio. Similarly, KOSS. This is a trash kind of company with headphones of Walmart that is no better than dollar store quality. They could have lost from $5 to something like, I think their high was 170 pre-hours. That are all stories that are going to really, we don't highlight them. It's not only sticking it to the upper guy. AMC, of course, still has a short float. See, this didn't work out as much because the shares float is 106. What they're attempting to do is literally pumping. Why? Because they attempt to go for the shares that are floating almost at a million. And that's easy to pump. And that's completely illegal, by the way. But let's go on and try to explain something here. Take a look into Volkswagen in 2008 short squeeze. What happened there? It went up from something like around $100 or $200 on average to almost 1,000 euros. And guess what? It did tank eventually. And that's exactly what hedge funds are going to do. A lot of them are selling their other liquidities because they know exactly what's going to happen. At some point, everyone who's in GameStop wants to go to the next best thing once it starts accumulating at whatever level it is. It's not going to stay there forever. And that is something you need to very much consider. Now, the next thing, I'm not basically, this is not a trash video on GameStop or whatnot. This is just making recognition of everything that is going on, and as a warning video. And the warning for this video is, well, there's a lot of global watchdogs basically sounding an alarm, UK, US. It's not only hedge funds. Imagine you're trading in a market where fundamentals, technicals, nothing matters. You're literally in a casino. And what happens when that happens? Everyone starts pulling their money out. Or not everyone, a lot of people pulls their money out. And you know what happens? This actually still happens. The market goes red. Well, did you think about the people who are Microsoft, Apple, and all these guys that are freaking out? Apple itself, for instance, even though it's an earning week, take a look at how much it dropped. It dropped from 143 to 131. Might not be significant for some, but it still has dropped. Tesla had a bad earning, but bad earnings never hurted Tesla. But it still dropped from 900 to 793. It's affecting the entire market is what I'm saying. So even though you're sticking it to the upper guy, you're still giving, there's still a cost to everyone else in the market that is not trading into this mania. A lot of different good stocks that I enjoy have been dropping non-stop. Like, let's take a look at CCIV. It went from something like $24.95, 15% down on 27th. This mainly was also to the GameStop Mania. There's a lot of different stocks as well. in general. That's something to consider. Now, a lot of people have been really upset at Robinhood and different stock traders basically limiting your ability to buy stocks or sell them. And some of them where they started automatically selling shares and they were super pissed off. But have you ever read the part in your massive document that you click on and you say, I agree to terms and conditions? You know, I got a bit into that, and my broker also sold some of my shares or coverage. It was fine for me because I understood it. But take a look. This is on the 28th of January at 11:24. You can call it manipulation, whatever, but it is legal. Let me show you what happened there. So, GameStop. Oops, sorry, my bad. GME stock. What happened yesterday was it literally went down to from 400 or almost 500 to 71%. Now, do we talk about all these people that literally just bought in this range at least 60% down, or in the morning thinking that, yo, this one is gonna make $1,000? People on Wall Street Bets said that, going on from 500 to diving all the way down to 71. And even if they held the line, guess what? It would still be down 45% today, 30% today, 57 yesterday. Who's going to pay up for these guys? It's not the hedge funds. It's different people. Now, here is the bit of part that in your broker, and I bet if you go right now, you'll find it in there. This is my broker, and it's a Canadian broker. Security provided is value is not less than the minimum value established by us from time to time. We secure the right to consider any security. We reserve the right to consider any security to be ineligible from time to time. You also understand that blah, 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 and it basically says that without your permission, they can sell any or all security relating thereto which may be in our possession or which may be carrying off, buy or borrow any or all our securities relating thereto off which your account may be short, exchange any domestic or foreign currency balances. Basically, you don't really have full control of your brokers, of your shares. Some people are going on, well, you know what? What about Webull? We're just going to go from Robinhood to Webull. Now, a big part of it is, okay, you can go ahead. All right. But a lot of people that basically have seen this kind of massive thing, and or a lot of people who have experienced this issue, I understand that a lot of people, were very upset on Robinhood, but in all retrospect, Robinhood or whatnot, they are all very much of the same thing. For one reason. So how do they actually make money? Okay. A lot of them actually end up making money through basically wholesaling their shares. So here, how Webull makes money. Webull makes money from margin lending, interest on cash balance, and payment for order flow. Now, payment for order flow, very much like Robinhood, almost all brokers except Fidelity sell your order flow to wholesale market makers because it's one of the only ways for them to directly offset the cost of offering the $0 trades. Think about that. It's not just basically, Webull's going to be doing the same thing if it happens over there too. I know Interactive Brokers as well done something similar there as well. So keep that in mind. I know there's a lot of rage on Robinhood, but wherever you go, the rules still apply. Now, the big thing about what I want to show you here is just quickly on the chart. Now, of course, hedge funds still have their money. A lot of them do. A lot of them are playing differently. Take a quick look here. People who bought this morning or yesterday morning at 5:13 thinking, oh my God, I'm going to be rich. It's going to go to 1,000. And then had their marks, their things sold at 110, or, they survived and they sold at 248. They lost 50%. Who's paying for that? Me or you? None. And then the people who bought this morning 425 and then basically see all these dips, right? Even the people who bought the day before and got their positions sold at 110. These things happen in the market all the time. And it's not only there. Let's go to another one. KOSS. People who bought 170, 174 and they got their shares sold at 24. No one talks about that. Here's the trend line from this. 174 all the way down to the bottom. You're looking at 599%. Doesn't even make sense. But in general, you basically lost a lot of money. But that is almost, let's say, okay, 174. You know what? I'll do the math quick. 174 to 30 divided by 174. You lost 83% off your total face value. Massive, eh? Okay. So what I'm trying to say is I'm not scaring you off the trading market, but I'm trying to say that be careful, because this is a pump and dump. This is not based on fundamentals. It's based on a short squeeze that is used as a reason to pump the stock all the way up. Similarly, all these other ones, AMC, this is on the verge of bankrupt. Everyone goes to the movies, right? From $252 down, $25 to down to $13.22. Yesterday, even hit down to $4.21. It didn't even recover this region yet, so that is something to consider. It's not only sticking it to the upper guy. Don't get fooled with this. Don't get fooled that your losses are sticking up to the upper guy. It's basically getting in the pockets of some 1% of not, because 99% of the people have been failed with this trade, except for the people who start trading it around 310 and then sold out probably somewhere around $6. Now let me ask you, if you're holding GME and you were actually investing in it and you had somewhere around $36 or $40, wouldn't you be selling at like $100? Because that's what an investor would probably do, or a trader. This is just Mania, so be careful, please. I know that within a month or two from now, I'm going to see a lot of messages that will say, I would have made X and Y if I did this and that. And that's the truth with the market. Just please be careful. You can easily be fully in debt, massively in debt if that happens. So be careful. Have a wonderful day.